Hello and welcome to this year-end special, Value Hunting in 2015. Well, that's the big question, isn't it? Whether there is value enough left for you as an investor or a trader to pick out in the current year so as to be able to reap benefits in 2015.
Well, two experts joining us to answer all of that, Atul, Suri as well as Hiren. Hiren, I'm going to start off with you first. What's the sense that you're getting? Is this the beginning of a Modi-driven rally, or are we at the end of a post-QE-driven rally?
Well, I think, obviously, if you look at it only from the India point of view, we are at the beginning of a new phase in the country, driven obviously by the political change. And what we are seeing now is that we've never seen such a favorable macro context starting from the last 6 months as oil and commodity prices have dropped. So my sense is that you're probably seeing the beginning of, we've not even seen the impact of that on the economy or on corporate profits as yet. So to my mind, it is just the beginning right now.
Atul, Suri, you've been giving targets like 10,460 by May 15. The volatility of late, and not just India specific, across the globe, does that get a little bit unnerving as a trader?
Corrections are a part of the deal, Ayesha. I wish life was just one small step every day. It would have been much easier, but volatility is a part of it. And what you rightly pointed out, that it's global. It's something that you're seeing. As I said, you start off with currencies. The dollar has been a very strong currency, and it's reached some very important technical levels. It is wobbling around a bit. You've seen that stoppage in yen also, because the yen was one very big instrument for the move in the last 3 to 6 months, and what you can see that happening in the Nikkei. So I feel that the currencies have coming to very important levels, and when they reach important levels, they tend to go sideways, wobble around, correct. And I think that is having its knockdown effects. What's happening to crude is definitely something you can't ignore, and it's hurting some countries also, and they are a part of the emerging market and BRIC basket. Just as China and India would be the outperformers for the year, both maybe around 30% up for the year, the two outperformers. The two worst performing are the other BRIC countries. Russia is probably the worst performing market in the world this year. So, you are having certain dark segments. And, as I said earlier, that when commodities, currencies approach resistance areas, they wobble around. And that is what's really going to be reflected in our market. But I just think that it's a comma, it's not a full stop. Things may wobble around, things may correct, but sooner or later they will move up. As Hiren pointed out, I feel that it's a larger move. Whether you hit it in this week, this month, I don't think that matters. The question is the direction. And beyond the correction, beyond the wobble, I feel the direction is north.
So the dark areas are not going to take over, is my next question, you feel?
Yes, it's not going to be a Darth Vader kind of situation, and the darker side is not going to take over, hopefully, our markets, and it would just be a bit of a wobble, I think.
A big thing that a lot of people talk about, Hiren, is that this is also, in a very large way, a liquidity-driven rally. Now, the question is, we, of course, in 2014 probably haven't seen as much money coming in, strangely enough, as maybe a couple of other years as well. But does that part of the puzzle look okay to you? Do you think there is enough and more for India over the next 12 months? Let's stick to 12. We are talking about value hunting.
Do you have any rally which is not driven by liquidity?
No, of course not. No. What I'm saying is principal part.
Money is fundamental to creating that demand for stocks. So I think that's very, very benign. And while people would like to talk about liquidity from abroad, I'd like to say that the biggest opportunity lies about liquidity from within. As far as foreign liquidity is concerned, I think that I do expect, over the next, probably starting 2015 onwards, that so far a large part of the global FI money coming into India was coming through ETFs or through large macro funds or through global emerging markets funds who would then invest a part of that in India. And as Atul rightly mentioned, that how performance of various emerging markets are now diverging because of the macro is impacting several of these economies very differently. I think that there is an increasing realization amongst long-term institutional investors that the trend has to move back from global emerging market investing back to taking calls on single countries. And I think that therefore India, China would specifically stand out, and especially India should stand out, because we are in a very interesting context where growth is at the lowest, interest rates are at the highest, we are the biggest beneficiary of fallen commodity prices. And we have a great government. A 30-year political trend has changed from coalitions to a single party government. So I think people are sitting back and taking notes. So I think the character of the foreign money, I'm not saying that therefore you won't get the ETF and the big macro flows, but I'm saying qualitatively you should start seeing more directed foreign money coming into this country.
Okay. And Atul, just before we hit that break, everybody's talking about the benefits as a result of crude, and some people will argue that excessive fall might be harmful as well. But just put into perspective what the currency is doing as well for 2015.
Yeah, I mean, see, last year we had a very wild swing in the currency, and direction of the currency is one angle, but it's the volatility that I think very often upsets the markets. And what we are seeing is that the dollar is strengthening, and by virtue of that the rupee will also weaken. It has been sort of day by day weakening, but the important part is that the gradualness of it, the controlled nature of it. So unlike last year, where one felt no one was in control as far as the currency goes, as far as the macros go, the feeling of control, and that is shown in the controlled price movement of the currency. I mean, we may go to 63, we may go to 64, fair enough. That's a part of the global macros, economics, your deficits, a lot of variables coming into it, like China exports, too many variables to it. But as long as it happens in a calibrated and measured manner, I have a feeling that that is not going to create panic. Yes, we know the direction is going to be north. We know that the rupee is going to gradually depreciate in the short and medium term, as long as it's not a crazy blip. It's not moving 1, 1, 2, 2, 3, 3%, which was doing, and that is what upsets things. So for me, it's more important the lower volatility. That is okay. Yes, overall macro trends are there, and that is being reflected in the direction.
Yeah, some credit should go to the other man at the top of things as well. Raghuram Rajan has been fabulous out there. It's not just Mr. Modi. But anyways, we'll take a very quick break. Come back. We've spoken about the global macro and the macro factors at large. We try and figure out from our two experts as to where is it that value lies for 2015.
Well, we're still in conversation with our two experts, Atul Suri as well as Hiren Ved. The point being, 2014, it all looked good as we come to a close. What happens comes 2015? Now, where do you see value and where do you hunt for value? That is the key question that we're going to try and answer and dig out from my experts right here. And Atul, I want to come to you. We were just discussing the data and, analyzing the nifty gainers from, say, May to December end. 6 out of 10 of those names were banks. What happens now? Do you see a shift to cyclicals? Because cyclicals is supposed to be the big peg point of the Modi government and their expenditure.
I think that banks are still going to perform. And my reason is that if you look at bond yields, I feel that they're already heading south. I feel that your 10-year government bond yield will come to around 7.2 from 7.8 or thereabouts where it is right now. And I think this will be a very big positive. Interesting trade for 2015 could be the PSU space. This is a hugely underperforming, not a favored space. There's also a lot of under ownership in terms of weightage of various institutional investors. And I also have a feeling that among the long short funds, there are some short positions also. And with these diving bond yields, you will find that there is, and if hopefully you have upticks in the economy and your whole bad debt problem or bad books sort of improves, or the feeling of that, I have a feeling that this is one space which is really pulled very south, could sort of spring up, and you could have a surprise big up move in the PSU banking space. Yes, the private sector banks are on a multi-year bull run, and there is no disputing that. They are a large trend, and one is not taking away any credit from them. But in terms of a surprise move, or in terms of a pop or a percentage move, I have a feeling that we could see, especially in the first half of 2015, some very interesting moves in PSU banks, and I think that will surprise the people. And that helps the bank nifty, which overall helps the nifty, which I think will be a very important stimulant for the markets.
But would it be a blanket sector call, or within PSUs also would it be a stock specific bet?
Definitely for someone like Hiren, who's a stock picker and who knows the difference.
Who's not going to talk stocks.
Yeah, for someone like me who just either buy the basket, because it's so so difficult. There are so many of them. But certainly some charts do stand out. Even in there, some charts do stand out without mentioning names, but people can really go up and see where the performers are. There are some of them that are really standing out. But I think
the bigger ones?
Maybe. But I think overall the PSU banking space looks interesting.
What about the other leg of the defensives, IT? Is it time to call it quits, IT? Because of the kind of soundings and alarm bells we've heard from TCS and the likes? Or do you add money right now because it's all negative news surrounding the sector?
I don't think that it's history. Just one quarter doesn't make it. It's more of a cross-currency issue. And the reason is that if you look around us, what is changing the fastest is technology. Yeah. I think, with all the social media, I think media spend trends are changing. The way companies connect with their customers is changing. There's more and more software in cars today and sensors. You're looking at replacing, logistics with drones, right?
Yes.
So I don't see a reason why there will be less need for technology. In fact, if anything, there's going to be more need for technology. Right. So I think use these as opportunities to, to buy into some of these companies. Also, I think, both these industries, the generic pharma industry and the IT industry, were all born in the early 90s. It's just been 20 years since we've seen growth. And, it's very difficult. I can't see other large countries which pose as challenge to some of the well-run Indian companies. So I think there is humongous scope in IT, in pharma to continue to grow. So it's not about 1 or 2 quarters of warnings. That's not going to change things around.
Atul, you've been a fan of the pharmaceutical space. Now, people have already made money in Cipla's, Lupin's, or Aurobindo Pharmas of the world. Do you book out from those names? Do you look for hidden gems within pharmaceutical stocks which haven't moved, which perhaps have great value, like, Ajanta Pharma, Ipca Labs of the world? How do you approach the pharmaceutical sector now?
My studies or my looking at charts really tells me that probably the sector with the single largest, singular secular trend that we have seen in the last 5 years, post 2008, is pharma.
Right.
And the beauty is, Ayesha, not just the percentage moves from point to point, it's also the volatility. Very often sectors that have very high volatility, as an investor or trader, you very often get eliminated because a lot of emotions come in when stocks correct sharply. But probably one of the sectors with the least amount of volatility and a beautiful smooth curve has been pharma. That is why you will find a lot of wealth has been created by investors in pharma. Right. They didn't have to get bothered on a day-to-day basis, and without taking names, but some of the names that you mentioned, rightly so, have created immense amount of re-rating.
You just buy and forget about those, and
you leave alone the last 1 year. Even when the markets were not into lifetime highs, like that's about a year ago, still these stocks were multi-baggers. And I think that they are in very long-term trends, and there is nothing to tell me on the charts that these trends are, or the stocks are being distributed and all. They are continuously making lifetime highs. It's in the large cap space, the performers that they are, without taking names, like if I told you that stock last year, you'll say, oh, that's like moved up. But it goes up even 40-50% from there, and 40-50%. The power of compounding sets in, and the numbers that come out, or the kind of wealth that is created, is humongous.
So you stick with performance.
Definitely. I think that in a longer time frame, the sector that's the smoothest, that's growing beautifully, and something that will not shake you off, and where you'll really create money due to the power of compounding, which is the ultimate truth for any, Hiren would agree, for any long-term investor. And you would like to be in one of those stocks. You don't want to be getting in, getting out, and doing things every day. You would love to get into something and ride it for a few years. And I think that's when you'll create real wealth, and that's what I've seen in pharma. And there is no other sector parallel to this, at least at the moment.
Actually, just to add to what Atul said, in fact, it was quite interesting. First half of 2014, I was in the US, and there was a Wall Street Journal article, so I was just reading, and there was a nice table there. And quite interestingly, it had the top 10 global pharmaceutical companies. And there was only one generic company in the top 10 at number 9, which was Teva, which is the largest, generic company. And that kind of made me think that even in the top 10 today, it's all innovators, right? And as the biggest markets, which is the US, Europe and Japan, decline demographically, and innovation, as we know, is getting harder and harder in the pharmaceutical industry, it is logical that a couple of years down the line, you will have at least 2, 3, 4 large generic companies of size, which will be there. And I think the Indian pharmaceutical industry has clearly demonstrated that they have a globally competitive advantage. So I think that this sector could well run for another few years because, generics are not going out of fashion. Healthcare continues to be a big issue globally, and they're not even in the top 10 as yet.
Okay, Atul, just before we hit that break, you was talking about curves, you're talking about riding. I want to ask you about autos. No, don't worry. I want to ask you about autos. That's, that last 12 months, it's done really well. Yes. The top 10 names, we have banks and we have auto companies. Does one still continue to enjoy the ride?
Again, something that's done very well. Yes. And again, I see no reason to, upset the cart. They've had some dynamic moves. You look beyond just the index, the auto index. You look at some of the auto ancillaries.
Yeah.
Yes.
The kind of performance that they've had. And again, here you will find is that the smoothness of curve. These were trades which never, sort of eliminated you. I mean, you didn't have a 10-20% kind of correction. Even the correction that were there, were a very measured 5-7% correction, got into new highs. So in these cases, there is no, you're not seeing any distributive patterns and things like that. The moment the market corrects and takes a step up, they are the first spaces that get into lifetime highs. So these, of course, don't tell me that things are topping out. I feel that there is momentum, and from the trading point of view, I would think so. Value, I don't know, but in terms of price, they still look promising.
All right, stay on, gentlemen. Lots more to chat about. We'll take a very quick break. And when we come back, we try and talk about pockets that really haven't gotten off the block till now. Whether there is any kind of buying that our experts believe could come about in 2015. Stay tuned. Back with our year-end special value hunting in 2015 in conversation with Hiren Ved and Atul Suri. And gentlemen, we've spoken about a lot of pockets that have done really well. So that's probably the easy aspect. Companies are doing well, you go out and buy them, you'll probably make money. What about those laggards? Just as Shah Rukh Khan said in a Filmfare Award, un logo ka jo gandi picture banate hain. Let's talk about that now. All those which have been dogs of stocks. Hiren, let's start off with the obvious, infrastructure. When the government came in, everybody said, hey, this will change, go out and buy these stocks. Maybe they gave a brief rally. And
for infrastructure, it's picture abhi baki, I think. Well, again, Shah Rukh Khan said
the point is whether it actually makes a debut or no. Really, that's the point here. What happens to this space?
It's, one of those movies which is consigned. It never starts, and then it probably
shelved.
probably it won't get shelved, but hopefully, but it'll come in a new avatar. You need to change the actors there. I mean, the same ones won't do.
Oh.
No, truly. I mean, I think that the problem is that the key players in the infrastructure space are the ones who all have baggages. Somebody's coal mine is gone, somebody's balance sheet is leveraged, somewhere there are governance issues, right? So the problem is that it's going to be a long deleveraging cycle. See, after every party there's a hangover, and I think these guys are going through a big hangover right now. And typically in markets, I mean, correct me if I'm wrong, but it's a typical 8 to 10 year cycle, right? So if you take the previous peak in 2007 or 2008, right? You've gone through a massive correction. Now probably is the time for deleveraging, balance sheet correction. You will find a few odd companies that will do well out of there. But I think the area to look there is companies where the balance sheets are fine. The P&L may be bad right now, but the balance sheets are okay. And if you can find some of those, I think those are the ones which will probably have a better chance of taking advantage of the new opportunities that will be thrown up by the new government.
Are you trying to find those, or are you just leaving the sector alone?
No, we have. Okay. So unfortunately, I can't take names, but yes. So it's very simple. It's not very difficult, right? Find a good balance sheet in a stressed sector, and probably the ones to move, or the better way to actually play, and which is something that I've learning through cycles, is just buy the good quality large caps in those sectors. You will still be okay. You don't have to go and really, go and play the small and the mid caps in that space. If you can, that's fine. But I'm saying if you're a general investor, you are okay just buying the high quality large cap in that space and you'll still make money.
Atul, Suri, since Shah Rukh Khan is your neighbor, where are cases where picture abhi baki hai, or for that matter, shuru nahi hui hai?
So I had read somewhere, and I've seen this happen out in our markets, is that whichever sector leads a bull market, it is an underperformer in the next bull market.
Yeah.
So in 2000, you had IT stocks that led it, and industrials and all were laggards. You didn't make much money there. But when you had the fall, and in the 2003 to 2008 bull market, IT relatively underperformed. And all those, not so favorite industrials, your infra, and all these guys performed. So now when you are having this bull market, what led, or what were the leaders, or where the froth was, like in the space of real estate? If you remember, the peak was made by some of the movements in real estate. Your infra companies, high leverage, blah, blah, blah. And you see that how they are underperforming. If you see the underperformance of this sector, it's shocking vis-a-vis, So I think every bull market throws its leaders, and it's ideally best to be in those leading sectors, things we have discussed. Yes, a catch-up does happen. It's a rising tide, so all boats will rise. But you are likely to make relatively less or more difficult money. And as Hiren rightly pointed out, it's best to be in the large cap, because even if you get whacked, you don't get sent to the cleaners. The risk is that even today, we have markets at 8,200. You see the number of stock making 52-week lows. And there were very big marquee names in 2008. They were up there. They were the largest wealth creators. And they're hitting 52-week highs when the index is 8,200. And every time the market corrects 5%, they are the ones that are giving way. So, why do you really want to be in that space? Yes, they will catch up. They will have good days. They will be short covering. They'll be up 20%. But are you likely to be riding them? Then my answer is no. So even if you want to take a bet in that space, just make sure that you're in the best top quality. Because as I said, even if you get whacked, you don't get you're not game over types,
Just one quick word really. When you were with us during the Diwali Samvat session, you spoke about two interesting pockets. One of them was auto components. You had mentioned a name there. We've discussed auto components. The other one is logistics. And sadly, for somebody who's looking for value right now, those stocks aren't exactly cheap. I mean, they've gone up almost 50-60% from the time that you spoke about them on air as well.
Right.
What does
more
one do
actually,
there?
but
probably more as well. So within
even
the
I'm
sunrise
scared
sector,
Your smile doesn't say that.
Within the sunrise sectors,
Yeah.
where is it that you see value? You may not be able to name stocks, but what pockets do you like?
No, I think I would still say that amongst the sectors that investors can play, I think auto ancillary is still a sector where I think that you would still find comfortable value and growth, right? And the beauty about the auto ancillary sector is that what I call is that they have twin engines. They sell into the domestic market. Some of them are also globally competitive, so they export, right? And that's an interesting combination, where they are straddling both the markets. So I think auto ancillary is a space. Logistics is something that we liked, but as you rightly mentioned, valuations are way out of whack. If they correct sharply, probably people could look at it, because there is going to be a multi-year growth in that sector. But probably one has to be careful about valuations in the near term there.
New Year resolutions, how can we leave without that, Hiren?
Just keep doing the same thing again and again.
Oh, wow.
Making money.
How many more diving sprees?
Yeah, just double the number of scuba dive trips this year.
Awesome. What about you, Ayesha?
Health and wealth, in that order.
Nice. Wealth and more wealth. In that order.
Health is wealth.
Thanks so much for joining us this leg of value. Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.